Welcome to the next part of the ICT Mastery Blueprint. We're going to start getting into some very complex, more advanced concepts. Not really advanced, but they are more complex. We're putting in stuff that we learned together in the previous episodes. If you haven't been watching the entire series, you would probably want to go back and start from there. Today we're going to be talking about opening prices, which kind of gets into time and price theory. So you guys don't like to waste any time. Let's get right into it. What is time and price theory? Very simple. Time and price theory states that the market is delivered by algorithms that run on price and, more importantly, time. So time and price theory states that price, buy programs and sell programs that deliver price to liquidity and inefficiency fire off once time levels and price levels align, meaning when it's the right time and at the right price, not just the right price at the right time. That is when the algorithm will fire off sell programs and buy programs, in which we already know those programs deliver to liquidity or inefficiency. So what the heck does that mean? I'll tell you. There are levels inside the marketplace that you can view based on price. For example, a fair value gap, maybe an old high, an old low, maybe a breaker block, market structure shift, whatever it may be. Those are price levels. We can visually see them. But for example, there are levels that are algorithmically printed and in reference to time. For example, previous day's high or low. That's not just a swing high. That is a swing high at the specific time point of the previous daily range, the highest high of yesterday, that time component. For example, first presentation fair value gap, new day opening gaps and new week opening gaps, opening range gaps. And we're going to discuss one of the most important concepts, and that is the opening price. This is a key level on the premise of time that is very crucial for buy and sell programs. So what are opening prices? Similar to the open high low close, open low high close lecture we already discussed when we're talking about opening of candles, opening prices refers to the power of three and candle formation. So the opening price of a very specific candle can be very important to tell us when we're likely to see buy programs and sell programs. So the focus is these three opening price. We're going to talk about the daily opening price, which is midnight open Eastern time. The ICT New York Kill Zone opening price, which is 8:30 a.m. Eastern time, and then the New York opening price, which is 9:30 Eastern time. So what is the importance of these opening prices? The importance is very simple. The algorithm will refer back to these levels as initial value of that specific day or session, right? So it's the initial value. It's like if I said, okay, well, today we're going to sell iPhones for $100. Well, if we start at $100, if the iPhone price drops below 100, then, well, we're in discount, right? And if we're above $100, well, that means we're in premium for this day or for this session. So it makes sense that that kind of pivot point is very important, and especially when it comes to the markets algorithmically, because we're talking about power of three. So smart money looks to accumulate long positions at or below the opening price and accumulate short positions at or above the opening price, as the opening price can give a value of discount and premium for that trading window. So this is a case study from yesterday. You guys know I don't like to do, this is literally from yesterday. So we have 9:30 opening price marked out right here. We have 8:30 open higher, and we're above midnight opening. So we have some sort of sense of discount, knowing that the algorithms that fire off at 8:30 in the ICT New York Kill Zone, which starts at 8:30. So this represents New York Kill Zone open. We're below that, meaning we have a sense of discount because the algorithm has offered discount. This is in discount. So we started here and we're below it. Therefore, we have discount offerings. On top of that, we're trading at a key level, the weekly SIBI, and yes, we are above midnight opening price. So the algorithms that start firing off at midnight, that's kind of when the algorithm resets. We'll view that level as well. So what happens? The market goes up into premium now. So above New York Kill Zone open, above 9:30 open, above midnight open. So we started trading at here, we're in the kill zone. We started trading here for the daily and here at 9:30, and we're above all those price levels. Well, would you look at that? We see speed and velocity and very quick displacement towards, where do we go? Discount, right to midnight opening price. Why is this significant? Because price delivers from premium to discount. Buy programs and sell programs deliver price from discount to premium. That is the point of a buy program. Buy programs will take price from discount to premium, and sell programs will take price from premium to discount. Obviously, you have levels like these equal lows that you can also look at, and you can kind of see that generic structure here. So we are in discount, we go into premium above the New York Kill Zone open, we get back below it, and we see speed towards discount. Discount being these equal lows and midnight opening price. So very generic example of how you can use opening prices. Notice the accumulation that occurs here. So not only do we accumulate here going into 930, but we have accumulation pre-market. Then 930 opens and we have a Judas swing higher. And we're going to talk about Judas swings in another video, but Judas swing is basically a fake move. So we have accumulation, we have a manipulation higher, and then we get that distribution lower. There's a classic power of 3 setup. So let's go on the chart and I'll give you guys one more example. It's not going to be too long of a video. This is from today's price action. So you see me, I'm not pulling out something from 12 years ago. I use this every day in my trading. You can use it as well. Very simple concept here. So this is from today. Today we did end up taking some losses, but the idea we wanted played out, and I'll go over the narrative, exactly why I was looking for longs from the New York Kill Zone opening price, 830. So very simple. We're bullish on the day. And let me go to the 15-minute chart before we move forward. So this is midnight opening price. You can see we have accumulation here, right? So midnight opening price, and we see a sell-off. In a bullish market, we see a sell-off overnight. Very typical, especially when we're going to leave equal highs right here, that we are going to see a reversal. So if we're going to see a reversal, we know that we are in discount. Well, why are we in discount? Because we're below midnight opening price. We are below that price level. This is midnight opening price. So we started the day at this price level. Let's just, for simplicity's sake, call it $100. We started at $100 today. And yet, overnight, the market dropped to $25. What a great price to buy this market and send them back up above the opening price at 100. So just like kind of like an ATM, literally. Like it's a free kind of money pattern, I guess you can say, where price gets sent lower simply to buy it back and sell it expensive, right? Buy low, sell high. Very simple. So understanding that we're in deep discount in a bullish market when we have equal highs above, that was the narrative for me going into longs today. Now what I want you guys to focus on is how we open up at 930. So right here, it's 930 open. Accumulation pre-market yet again. What do we know? Smart money likes to accumulate long and sell position, buy and sell positions, long or short positions at or below the opening price when bullish. So what do we see here? We are above the opening price. We come below the opening price. We're still in accumulation. We have a huge accumulation here. This is one big accumulation. What happens? New York opening price. Notice how it's referring back to this specific discount level. Now this is also a PPI candle, so it's kind of an extra bonus. It's a little bit more significant, just from my experience. But nonetheless, 830 opening price, New York Kill Zone open. Notice how we're accumulating at 930 open as well, right? And then we see this sort of manipulation, and then as soon as, do I even have to say it at this point? The 1050 macro, which this has been repeating like every single video. You notice I'm always bringing up these macros. The 1050 macro comes after a very large consolidation and accumulation of positions. This is where I got stopped out. I was looking for this run to midnight and the equal highs. I called this out at 9:15 a.m. Eastern time, right here. I was looking for this exact move from this exact price, but I got stopped out, right? We held on a little bit too long here, stopped, tried it again here, stopped, and eventually we saw the move in the macro. So it would have been a great time to wait for the 1050 macro, because look how clean the move starts at 1050. Now I did go long in the 950 macro, and we did see a nice run higher, but then again it fizzled out. So a large accumulation at or below the opening price. Well, we're below midnight, we're below 930, and we're below New York Kill Zone opening, right here and here. Notice how we're not going that far into discount, because we're accumulating longs, long positions. Smart means accumulating long positions. That's how the algorithm delivers price. Once time is right, once the price is right, we get to change the state of delivery, which you should know what that is. Inside the 1050 macro, we trade back into it. If you missed that, you can trade this inversion fair value gap, stop at the intermediate term low, And then obviously you see that very nice price run to the equal highs. More importantly for me, midnight opening price, because what's midnight opening price in this case? Premium. Buy programs, deliver price from discount to premium. This is a clear buy program. There's no way anyone can say this is anything else. It does not make sense. What are the odds that as soon as we trade into the New York Hill Zone opening price, we get a change in the state of delivery right inside the 1050 macro? After accumulation at the exact price level, we expect accumulation, and then as soon as the macro comes, we get the inversion fair value gap, trade back into it at 1053, and we deliver all the way up to midnight opening price at the end of the macro, premium, and then towards the relative equal highs higher, and then whatever happens later, just lunch stuff and whatever. That's not really the importance of this video. Not the longest video, but hopefully that was somewhat insightful when it comes to using opening prices to measure buy programs and sell programs and the relative strength towards discount and premium, as well as 930 opening price. So hopefully that makes sense to you guys, and I will see you guys in the next video. Till next time, peace.